Well, welcome back to the channel. In this video, I'm going to show you a trade setup that I'm looking to take on the pound yen. I'm going to walk you through it step by step and hopefully give you some insight into how I approach the markets in this particular situation to help you with your own trading. So let's get stuck in. So this is the pound yen. You're looking at the weekly chart, and the reason I look at the weekly chart is just to see what's going on long term, okay, where we're at in terms of previous historical events, maybe some respected structure levels and things like that. And you can see that back in 2008, July 2008, we had this previous high and we're right back up there, and recently we failed to break that high. If I go down to the daily time frame, here, you're going to see that recently we failed to break that high. This was the high here. Okay, we had this kind of triple test go on where we had these a failure to break the high. So we had one, we tested it, we put in a double top, then we put in this kind of 2618 or triple test where we just failed to break that high. That 214 level was being respected. The bears were protecting that level for whatever reason, and then we violated the low. So you can see that we actually violated this low. We put in this initial low, this reversal zone, this reversal indication here as well. So since then, I've been looking at this market, and recently we were putting in this kind of bear setup, this bear flag setup. But what we've done now is we've pulled back up into this previous level of structure. Now, on not only is it major structure on the daily time frame, but if we drop down to the 4 hour, you can see that we've now pushed back up into this level right here. Okay, now this is the level that I was paying attention to, because if you bring on your remember, structure in my trading, structure just trumps everything. Okay, basically structure, I trade primarily off of structure, and then I use confluence factors to and kind of some discretion that I've built over the years to kind of give me a real confidence factor into whether or not it's a good trade setup or not. And the first thing I'm looking at is just structure, right? So you can see that this was respected once, twice, 3 times, 4 times, 5 times, right? We then dipped down again. We failed to break the low, and then as we broke through it, what happened recently was we broke through it, we pushed back up, it became resistance, and now we're up in that level again. And what's really attractive to me, the way that I'm thinking about this, is we've been consolidating for a while, and then we saw this massive bullish move this morning. Okay, so this happened this morning, early hours of this morning at the time of recording this video. It's currently the 24th of February 2026, and what's happened is we saw this big bullish run. Now, whenever I see a big bullish run in the market like this, whether it's caused by news, which it usually is, some kind of fundamental thing, I love it when we see these big runs, and I particularly love it when I can look at what happens next as we approach these major structure levels. So as this started to take off, what I'm looking at is left. I'm looking at all these structure levels, these respected levels, and then what I like to see is once the bullish move takes off, how it behaves at that level. And I predict that, if it does what I think it's going to do, and it respects price again over and over again as it does, what we should see is it hit it like a brick wall, like a brick ceiling, a concrete ceiling. So you have this big bullish run, and then bang, it just hits that level to give us like confirmation that that level is likely to be respected again. And then we can start to look at price and some other indicators to really give us some weight for our entry, some confidence in our approach. So already we had this candle and it closed right in that zone, right? So that's tick one. We're at the high. We didn't even break this previous high here. If I just draw this on, we didn't even break this previous high. We just smashed into it, closed. The next candle opens. Bears tried to take a dip down, and we close up in that level. This is what we call an indecision. Okay, so it's like an indecision candle, an anticipation candle, and right now in this most recent candle, it's literally a doji at the moment. So we got a little while till the close of this candle, but this is a doji candle where it's pure indecision. Doji means indecision. But what I'm looking at this point is this is enough confirmation for me to say price action. We've got the price action pattern that I'm looking for in that zone. So what I do now is I drop down to my lower time frame and I'm looking for entry techniques. I'm looking for conservative entry techniques that I can go down on a lower time frame for to get tighter stops and maximum reward to risk profiles. And the way you can do that is either you can drop down to the 60, right? So you can see what I'm looking for is a double top. Now the double top has to be a valid double top. So we have to have an initial test, and then we have to have a dip down and then a push back up to test the previous high, the initial high, but not close above it. And then some of the other filters that you might like to see are things like divergence on the RSI. So you might have an overbought condition on the RSI on test 1. So some of you might like to prefer dropping down to the 15-minute time frame where we are massively overbought here. And then you've got divergence on this second area here. We haven't quite tested it on the 15, but we have tested it on the 60. And we still have divergence on the RSI. And it's still conventionally overbought, because conventional overbought is 70 and above. And we were actually up at 75. Okay, above 75, and then we had divergence, not massive divergence, but we did have divergence. So what we're looking at here is getting into this trade on the completion of the double top, giving an ATR based stop above the high, okay, which is about 23 pips, I think, at the moment. And then our target needs to be placed based on my trading time frame, which for me, you know, initial targets would just go, if we got in here, initial targets would just go above these internal highs here, which also, by the way, is the form of an inverted head and shoulders pattern. So if you guys are familiar with head and shoulders patterns, you know, we don't want to fight beyond all of this neckline, right? You might split your position up and have multiple targets, and you might take half your position off here and then trail down to maybe the shoulder zone for target 2s, maybe the head zone for target 3s, and so on. But I'm just going to give you an example of going in and out, one contract, one target, and mine's going to be based on getting in on this double top. So if I just show you now the order that we're in, you can see that we got in at the this test here, close of that candle, which was the better entry point. I've got an ATR based stop, and my target is down here just above the closes of these inside structure level here, right? So all in all, that gives us about, if I bring on the risk reward profile tool just to show you how we're getting in, where we're getting in, where we're getting out, and what that means for risk reward, it's about a 1.5 to 1, which is great for a structure based short like this. And yeah, we'll see how it goes. But as you can see, risking in terms of monetary value about 2,000, just over £2,000 to gain about 4,600. So great way to start the week. If this plays out, all good. I've got lots of other setups on the radar this week. It's one of those weeks where I really have to keep my eyes on the charts. And if you want to come in and watch me do this every morning and see all of these setups, you can also go and check out tier1trading.com and let me know in the comments if you like these types of videos. I'll happily share one of my setups when they come up every week or every day or however many I get. Let me know in the comments. And until next time, good luck in your trading, and I'll see you then.